The secret to mastering EUR/GBP and avoiding its classic consolidation traps is multi-timeframe analysis. In just 2 minutes, I'm going to show you how to top-down analyze this specific pair from the weekly chart all the way down to the 15-minute chart for a high probability entry. Let's dive in. First, we open the weekly chart to understand the macro environment. Because EUR/GBP can range for long periods, we need to locate the absolute major weekly support and resistance boundaries. Are we trading near a historic range extreme, or is a major weekly trend developing? This gives us our primary roadmap. Next, we drop down to the daily chart to capture the immediate market structure. We want to see if the daily candles are respecting the weekly direction. Look for clean daily liquidity sweeps or pullbacks into strong daily supply and demand zones. Once the daily structure aligns with our macro view, our directional bias for the day is locked in. Now, we refine our view on the 1 hour chart to map out our zone of interest. On EUR/GBP, precision matters. We look for specific H1 order blocks, refined support/resistance flips, or clean fair value gaps that sit right inside our daily bias. When the price slowly corrective moves into this H1 zone, we get ready to execute. Finally, we execute on the 15-minute chart for a sniper entry. We wait for the price to tap our H1 zone and look for a clear execution trigger, like a strong rejection pin bar, an engulfing pattern, or a sudden shift in market structure. We enter here, set a tight stop loss just beyond the invalidation level, and target the opposing H1 or daily liquidity. By filtering EUR/GBP's choppy price action through multiple timeframes, you significantly increase your strike rate while keeping your risk tight. If you want to see more realistic, straight-to-the-point Forex strategies, make sure to hit that like button and subscribe. Happy trading!